Dealer. By Dave Marshall. http://www.meancounter.com. Dealer. An acronym to aid in remembering the major types of accounts and what's a debit or credit. Think of being in Vegas and sitting at a blackjack table. The person controlling the game is called a dealer. We'll use this term to help us remember the types of accounts and debits and credits. Dealer. Let's break this term down to represent the major types of accounts. D, E, A, L, ER draws/dividends. Expense. Assets. Liabilities. Equity, owner's equity. Revenue. Now, let's make two equal groupings of three, D draws/dividends. E expense. A assets. L liabilities. E equity, owner's equity. R revenue. Debits and credits. If you've not heard about debits and credits, debits are entries recorded on the left and credits are entries recorded on the right side of bookkeeping records, journals and ledgers. We'll build on this to determine what type of accounts have normal debit or credit balances. Dealer. Now, let's take our first three letters from the left. D draws/dividends. E expense. A assets. Since these letters are the first three on the left, they represent debit balance accounts with a normal debit balance. Dealer. Now, let's take our second first three letters from the right. L liabilities. E equity. R revenue. Since these letters are the first three from the right, they represent credit balance accounts with a normal credit balance. When does a debit or credit increase or decrease an account's balance? It actually depends on the account's normal balance. If an account has a normal debit balance, draws/dividends, expenses, and assets, a debit increases the account's balance. If an account has a normal credit balance, liabilities, equity, and revenues, a credit increases the account's balance. If an account has a normal debit balance, draws/dividends, expenses, and assets, a credit decreases the account's balance. If an account has a normal credit balance, liabilities, equity, and revenues, a debit decreases the account's balance. If you were paying attention, if a debit increases an account's balance then a credit decreases the account's balance. Likewise, if a credit increases an account's balance then a debit decreases the account's balance. Hopefully, the dealer dealt you some winning hands on learning about the major types of accounts and debits and credits. Let's summarize what we should know. The major types of accounts are: dealer. Draws/dividends, expenses, assets, liabilities, equity and revenues. Debit/credit rules. Account type, draws/dividend. Expenses. Assets. Normal account balance, debit. Debit increases, credit decreases. Account type, liabilities. Equity. Revenues. Normal account balance, credit. Debit decreases, credit increases. Special thanks to Ron Leishman for the cartoons. http://www.tuneday.com